Good afternoon. Welcome to Business News from Mumbai. I am Shishir Shelar, joining with the top stories from the world of business and economy. Now, let's the news in detail. Well, the very important news today we got in the business world is the India's rupee fell to a record low and government bonds declined on a concern that potential pairing of the Federal Reserve stimulus will leave the currency vulnerable to an unprecedented current account deficit. The Indian rupee dropped to 61 rupees 51 paise per dollar in the late morning session on fresh dollar demand from banks and importers amid weakness of dollar in the overseas market and fall in the equity market. The rupee resumed lower at 61 rupees 5 paise per dollar as against the last closing level of 60 rupees 88 paise per dollar at the interbank foreign exchange market and dropped further to an all-time record low of 61. And to talk more on this rupee depreciation, right now we have with us our forex expert, Mr. Pramit Brahmbhatt, who is the CEO of Alpari Financial Services. Pramit, the mark we have seen today is 61.40 as a 5-1 is what we have seen here. But basically, there was speculation in the market that rupee may touch even more than that. It may touch 65. First of all, tell me the reason behind this decline in the rupee.
What we have seen in rupee recently is there is a sentimental market effect is coming in the rupee, where the Indian economy as a whole is not showing a good sign. We have seen that equity market has dropped today, as well as the FIs are pulling out of Indian market. So overall, the sentiment is negative about the Indian economy as a whole, and that's what causing the panic in the dollar-rupee market as well. After the steps taken by RBI, we have seen that speculative movement has come out. So the today's movement is dependent on the either is oil companies demand coming or it could be a pull out from FIIs and heavy payment going out in the dollar. So these are the two reasons we are looking at this point of time for the rupee depreciation.
All right. Well, talking about, as you rightly said, that the government will have to take steps now. But what are the repercussions do you see of this rupee depreciation on the overall economy? What are the results we're going to see? Probably a bad impact?
Definitely, India as a net importing country, our current account deficit will increase. We'll be paying more rupees for the oil and the other importing items. So that is definitely going to create a further current account deficit, and that won't be good for Indian economy. Also, we have to see that how our importers who are exporting the other goods will be affected by this, because their import will be expensive while they won't be sure about at what price they're going to export their goods. So this is a very critical scenario for rupee at this point of time.
Exactly. The market is eyeing on the Federal Reserve stimulus now, what we have seen here, and probably in future we may see some more stimulus here. Does that mean that rupee may touch again an all-time low? There's a possibilities of clear this 51 mark?
What 65 is a little bit far away to see, but above 61.50 level, we will see that rupee can go up to 63.50 levels at the next juncture. So 65 directly we won't see. Also, we have to consider that the RBI can take certain actions. As you mentioned about Federal Reserve, yes, the Fed from US is planning to withdraw the tapering the QE3 and the other stimulus packages, but they have not decided on the dates yet or when they're going to do it, because they are still analyzing the numbers coming a month-on-month and week-on-week basis. And in last month, we have seen actually a mixed bag of number coming. Some of the data is coming good, some of the data are not that good. So they have not still made up the mind. But the global market has made a move that the US is going to taper the QE3 at one point of time, and already they have made the dollar so strong against the other currency that it is going to happen in couple of weeks. But we will see in the global market that the dollar will get weaker once the sentiment of tapering will ease out.
Exactly. Well, right now, clearly pointed out one thing, that there's a chances that rupee may touch again low record, but don't know what exactly the number is. 65, you said that probably a longer one, but it may touch that screen. But talking about the RBI's move here, we have seen that RBI in the past also have taken many decisions as far as tackling this rupee issue is concerned. Do you think that those all the decisions taken by the RBI is fruitful? And what needs to be done in future also? As you rightly said, that probably we may say some more record low here.
Well, RBI has taken the qualitative as well as the quantitative measures, but RBI has the limitations when it comes to the quantitative measures. Like RBI cannot go and buy the rupee or sell the dollar like other central banks in the global market can do. we have to understand our currency dollar reserves is also limited and not as high as the other countries. So that way the quantitative measure RBI has the limitations. Qualitative measures, yes, RBI has taken some good steps, and we will see the results in coming months, because those steps won't give the results straight away within a weeks or months. There can be some more steps should be taken, as we were talking about the NRI bonds other time, or some sort of a foreign fund should flow in India for the longer term, that can stay here for long term, and that can give a stability to the dollar rupee price.
Exactly. You rightly point out that alone RBI cannot tame this big problem. The government should also come forward and to help to tackle these issues. That's what Finance Minister P. Chidambaram have also hinted out. Last week he said that government is considering to ease the rules for companies that borrow abroad, or potentially duties on imports such as items. Do you think that these kind of steps will definitely try to help to tame the entire rupee depreciation scenario?
Yes, the borrowing from the Indian companies from the foreign markets will definitely help, but again the payout issue will remain as it is. As we know that the current pressure on the rupee is also coming from that huge amount of external commercial borrowing which is coming due in coming months and the quarters for the repayment. So even the ECB is a good way to resolve it for a shorter term, but it's not a longer term solution, because whenever that amount will be due for repayment, we'll see a rupee will be under pressure. So the more of the infrastructure investment and the long-term investment in India from the foreign funds is one of the major solution that we can find for a dollar rupee pressure.
All right, but as you rightly pointed out that the foreign investment is required in infrastructure sector, but looking at the July or especially July data, if you take into consideration, we have seen the most number of FIIs have gone out from the market. What does that mean? Does that mean that rupee again will fall further, because right now we don't have a good investment limit to tackle all the situation?
Again, I would prefer that instead of FII investment, we should focus more on FDI investment, because FII is participating in the secondary market while the FDI comes directly in the industry. So that money stays in the infrastructure projects or the industry where they physically buy the assets and invest in the technology, and it remains in India. While the FII goes into the stock market, and when the gains happen or when there is any bad event happen, that money is being pulled out. If the money is invested in the FDI, through the FDI route in the real project, manufacturing projects, then it's not like that you can decide to invest one day and you pull out on the next day. So that money stays for the long term. So we should construct the policy which allows the FDI to flow in India very easily.
All right. As far as the investors concerned, what's your advice you want to give to investors who are currently quite in a catch-20 situation, where we have seen that it might hurt the growth also if the decision taken by the government or the RBI will again hamper them as well?
Well, I think at this point of time, rather than panicking, investors can look at the market very closely, and at any given opportunity they can sell dollar when it goes high, because we feel that the market rupee has depreciated too much and beyond the actual real reasons. So there has to be a consolidation coming from this level or little bit higher. 61.80 to 62.20 can be a good level to sell if the dollar rupee move at that level.
All right, Pramit, thank you for sharing your view with us. That was our forex expert Pramit Brahmbhatt giving the details about the rupees depreciation. He clearly pointed out that the FDI is much needed at this point in time to give some space, to give some breather to the Indian economy. He also pointed out one thing very clearly, that the investors who want to invest into it should take their steps quite cautiously before entering into such a volatile market. The rupee market, of course, we have seen a quite volatile situation here, and going ahead also we have seen some more downward pressure on the rupee, keeping the international pressure also in mind. Thank you, Pramit. Let's move to the stories now. A survey by